Hello and welcome to yet another edition of Banking Central series on Moneycontrol. Today we have a very interesting personality with us, a person who has been the pillar of HSBC's India growth story over the last 2 decades. Welcome to the show, Mr. Hitendra. Thank you for giving me time.
Thank you for having me over.
Yeah, just wanted to start. I understand that you have been with the HSBC for since 2001, and you took over the lead of chief executive in 2021. If you look back this journey of last 2 decades, what was the most challenging phase for you in your stint here?
Actually, to be very honest, it's been a relatively easy ride for me. I have to say, when I read about people who have had much more tougher challenges, more difficult situations to encounter, whether internal, market related, customer related, etc. I think I'm just either incredibly lucky or, more importantly, possibly the management structure that the organization has had going back all the way has kept us by and large safe and by and large in a growth phase. Of course, there have been pockets of turbulence when you get your client judgment wrong, markets judgment wrong. I was in the global markets business, and that's a daily fluctuation business. And there have been days and weeks where you really want to kick yourself in the backside for getting it so wrong. But by and large, I have to say that over looking back in my 22 odd years at HSBC, it's been a relatively smooth and a relatively easy ride, and I hope for the rest of the innings also it continues like that.
Yeah. For foreign banks as a whole, not specific to HSBC, this regulatory parity with other banks, intense competition from local rivals who has perhaps better knowledge about the local markets has always been a challenge. Has this ever created an impediment for you in your years? Yeah.
No, the simple answer is no.
Yeah.
Okay, I think if you go back 20-30 years, maybe more, the restrictions on branch expansion, restrictions on what you could do, your inability to manage some of the regulatory obligations in terms of directed lending or priority sector might have been issues, but that's, like I said, I wasn't really there, so I can't comment for that time. But I don't think any international bank today is going to say that their growth ambitions in the country, their aspirations in the country, their desire to be part of the great economic story that is playing out is compromised because of regulations. We are an international bank. We bring certain value to certain customers, which is unmatched by domestic banks, and similarly the domestic local banks have certain values and certain proposition which we are not able to match. The good thing about being in India and the role that I have and other colleagues have is that we know we are part of the cake size is expanding, right? So it's not like it's the same cake. If somebody takes one slice away, then it reduces for everybody else. The cake size is expanding. The better run banks, the more customer focused banks, the banks that are focusing on value propositions, presumably are growing at a faster pace than the others, but even the slowest bank is still growing.
Right.
We just hope to be in the former category, which is we grow faster than the system, faster than the industry, and we also hope that we do the right customer selection, because we can't be everything to everybody. So if we choose the right customer and offer them the right products and have the right staff to back it up and run the bank in a prudent manner, I think the opportunity is quite remarkable, quite open-ended, and I certainly don't think regulations are coming in our way. So if we don't do well, we will have no one to blame except ourselves. I don't think we have, and I'm not saying so because this is a video, it's the truth.
Sure. So if I remember correct, retail banking constitute around 13% to your Indian revenue, and corporate plus treasury around 80-85. I believe. So this is also a time you are actively making a comeback to Indian private banking business, something you had exited as part of global strategy in 2015. So why now?
No, so I think, I hope every viewer will agree, India has changed in the last 10 years, right? I mean, the number of people who are traveling by air, the number of people who are staying in 5-star hotels, the number of people who go abroad for holidays, the number of people who are trying to fulfill their life And that population has simply, I think, not just grown, it's exploded, right? Then you can look at any data point, the number of millionaires that are getting created, the number of people who are getting the benefits of, let's say, starting their own company, or benefiting from the ESOP system, or the compensation levels of executives in the country across a range of industries, right? All of that is when we sat back around almost 2 years back to say the country and these families and these individuals actually need a private bank, a proper full service global private bank that could offer them first class, top of the line services in the country. They can also benefit from the fact that we would be the only proper private bank that also has a physical presence. So you can do your normal banking activities, you are globally connected. All of these people that I describe will either have their own businesses or investments outside India, or they'll want to send their kids abroad to study, or they're just international in their thinking. And if you are international and well off in your thinking, and HSBC is international and caters to the affluent in every part of the world, I think there is a natural match. And rather than then say, oh, we did something in 2015, should we reconsider it? I am very glad that the team here and our colleagues around the world clearly saw the opportunity that I just described. And then you can get into the data, how many millionaires are getting created every month, how many billionaires are going to get created. The fact is the market does not have a single international bank with a proper private bank presence in country, internationally, and with our globality. We are already seeing that. We've launched it just on 4th of July. In 3 months' time, the kind of goodwill we have received, the kind of incoming messages we have received, the kind of reception we get every time we highlight to these super affluent millionaires and billionaires, I think we just think that we've taken the right decision. Of course, time will tell.
Right. Of course, there are reasons to be bullish on India. This is a time most of the banks, whether foreign or Indian banks, are aggressively expanding their operations. But let me ask you, sir, what's going to be the USP for your private banking offerings in India? You still have competition from the foreign banks like Barclays, etc., and local banks, Kotak, etc., actively growing their private banking portfolios. So what is the strategy going to be?
No, so without getting into the strategy or the positioning of the other banks, because that's their strategy and their positioning, we think if you want to be a for the very affluent in India, they need one global bank. Okay, I think that is becoming increasingly. That could be us, that could be somebody else. But you do need one global bank in your banking partnerships or your banking relationships. It is better if that global bank also has a local presence, right? So because you don't always need international services, you also need domestic services. And then you have a bank which is backed by a balance sheet, by a franchise, by a trust factor. See, we are the word most commonly associated with HSBC.
Right.
Whenever we do any dipsticks is trust.
Yeah.
Right. And we have been here for 170 odd years.
Yes.
If all goes well, we'll be there 170 years from now as well, which is not what you can say for most organizations, right? And some of the very wealthy also like a long-standing relationship. They don't really want to be starting a relationship every time because somebody starts and somebody stops or whatever. So our positioning and our USP or our distinguishing reason to exist as a private bank in India will be, as I mentioned, our globality. What we can do for you in India.
Yeah.
Think of a private bank who can do things for you in India that we can do, and you won't hardly will get to 2-3 banks, right? At that level of affluence. Then you say, okay, you can do this. There are 3 banks who can do this in India. How many banks of these 3 can do outside India? And you really come down to one, which is HSBC. And then you look at the word trust, and then you look at generally the things that make HSBC a bankable partner. Strong balance sheets, a compliance culture, a prudency to even advise our customers. We are not the bank you want to. If you are going to be, pushing the envelope of legal and regulatory issues, there are banks who can do a better job.
Right.
But if you want to do simple things in a nice, compliant manner, then hopefully we can do that's the customer who likes us, and that's the customer we whom like, and that's a large enough population. Just to close off on the private bank, global private bank, I think this is not, we are really looking for a few thousand families here. Okay, we don't intend this to be a mass market product. This is by invitation only. This is to, in every city we operate, maybe a 200 families, 250 families from each city. You multiply that by the number of cities we will have.
Right.
So it's a very bespoke, as I keep telling people, hopefully we will provide 7-star services at 5-star prices.
So that's what I wanted to ask next. Just for the benefit of our viewers, when you talk about private banking, what's going to be the core focus area of customers? Which are the customer segments you typically look at? You already mentioned the families, affluent customer base.
Yeah, so this is a proposition for the wealthy, right? I mean, we obviously have internal thresholds and cutoffs, but what you should get from us, okay, first and foremost, is a first-class service relationship team, right? Service and relationship team. These we cherry pick the very best from the market. They are not given daily targets, weekly targets, monthly targets. These are people who are professionals who will treat the relationship with great deal of deference and respect. So the number one thing is, the distinguishing reason should be the people that serve you.
Right.
The second thereafter is the range of products we can put, the range of products that we have available locally, and the range of products that we have available globally, the international expertise that we have, the kind of FEMA advice we can provide, for example. Right? Anything to do with cross-border requires FEMA. I am very confident that if you call most corporates and most high net worth individuals and family offices and say, which bank has impressed you the most on its FEMA understanding, hopefully the word HSBC comes on top. So that's the other. And third, of course, is like any private bank, whether it's wealth advice, whether it's investment advice, or whether it's loans that you seek for your real estate and other needs, we will have the full balance sheet to back it.
Just for some perspective, if I may ask, like I said, I remember you speaking to somebody in a recent interview that you want your wholesale banking balance sheet to be a backbone to grow your personal banking book. Like I said, 13% is the contribution to the revenue. I think it's a 2022 numbers. Where do you want to see this mix going ahead? Say down the line, 5 years or?
Well, as the CEO of the entity of the firm in India, ideally you want, we've got what we call global banking, and then you have global markets, or now we call it markets and security services, and we have commercial bank, and we have the retail, right? What we know as internally is referred to as wealth and personal bank. Ideally, you want each one to do 25%, right? Because then you have 4 wheels. Even if one wheel slows down, the car doesn't slow down too much, right? That's in an ideal state. But each business grows at the rate it grows, depending on the external opportunity and depending on what's happened to us. See,
this 25% is in terms of revenue contribution.
Yes. So that's the ideal state. Okay. At the same time, you don't want retail to go to 25 at the expense of the other. You want it to, the overall pie has to be growing. It can't be that somebody shrinks so that relatively this becomes bigger.
Got it.
I think the good thing is, since your question specifically was on our wealth and personal banking business or retail bank, I think if we do the right customer selection, that is, we go after the customer where we offer the maximum value to the customer. So there are customers where frankly the domestic banks will do a better job. We accept that, right? And in fact, I would say to 80-85% of the country's population, that is the truth. There is no way I can do to a customer based in, let's say, rural areas any proper service. The person could be a billionaire or even a but what can I do for, I'm not physically not there. I'm 1,000 kilometers away from the nearest rural area branch or something. So if we select the right customers, we spoke extensively about the private bank and the profile of the customers. Then we look at some of the senior executives we have, right? The executive population where the compensations increasingly are Western in nature. They also need something more than what we think, something more than what just the domestic banks can provide. They need RMs who understand them, who think like them, who respect what they have achieved. They need a bank that is trustworthy. They need a bank that is not hustling and pushing with weekly targets on this card or that loan or this insurance sale or whatever. There is a market for that. We are not in that market, right? So there is the senior executive market. Then there is the premier proposition we have, which is a unique proposition globally, because if you are premier in my country, and if you immigrate or visit UK, you become premier there, and that's a huge advantage. We are perhaps the only bank which is able to do KYC portability. So if you have an account here and you want to open an account outside India, your KYC gets transferred. Even your credit history gets transferred, right? So you get a credit card when you land. When you're sending your daughter abroad to study, the parents are very concerned, how will she have access to finance, or how should she be able to make payments on day 1, day 2, day 3, day 4.
Right.
We are the only bank which is able to do so. So net, we think there is a market out there which needs an international bank. We think we have the right products and the propositions, and we'll keep refining those products and propositions. And if we do that well, and that's a if today, I'm not saying we are doing it, and the corporate business continues to grow well, then we should, generally speaking, expect our retail business to grow at a faster pace than the wholesale business, simply because we start off at a lower base.
Right. So there's something I keep asking every banker. The times have changed in banking. The way banks reach their customers have changed. There is an intense thrust on the digital channels. So as you have an ambitious plan laid out, as you just explained, will you be depending more on the physical presence? You mentioned about rural centers where people want to see and feel each other. Or will you be depending more on the digital channels for this expansion in private banking specifically?
No, see, I think the channel you use to access, meet and serve a customer depends on the customer. Right. So if you're talking about the global private bank, that is always going to be led by individuals. I mentioned about the quality, and we hope we will have the best quality relationship managers and service people to serve that segment, right? That the experience, what they want to do, a remittance or investment, that could be done digitally, the absolute last mile. But where to invest, when to invest, why to invest, for this segment will have to be done through human beings. Whether that's through physical, in person, that's. On the other hand of the spectrum, let's say if you are wanting to give personal loans of ticket sizes of 3 lakhs, 4 lakhs, 5 lakhs, all the way to, let's say, 70-80 lakhs, right? That you cannot keep searching through the physical channel. That you need to have all the hundreds of lakhs and crores of people who want to consume today by taking a personal loan, that you can only access through the digital channel.
Is that an attractive proposition for you, the personal loan market?
Yes, of course. See, India India's household debt to GDP is so low. And if you happen to have a banking presence in the country, and you are able to tap into the marvelous digital infrastructure that has got created, which gives you so much more information from a credit risk assessment perspective, and you are able to open the account digitally, do the video KYC, do the fraud checks digitally, do the credit risk checks digitally, do even the disbursement of the loan digitally, and even have collections which are digital, then yes, of course. So we will have, depending on the customer segment, whether we will be physical or we will be digital, will be determined by the customer, as opposed to determined on the 6th floor of this marvelous building where we decide, okay, we are going to do everything digital, even if the customer doesn't want it to be digital, or we're going to do everything physical when the customer has moved beyond physical. So it will be horses for courses would be the approach, I think.
Something related to this question, you spoke about personal loans. I've been speaking to top bankers in your local rivals of late. So there is an increase in the portion of the unsecured retail loan in the overall book. So for instance, Kotak has seen from 7 to 8% of their book to around 11% now. So, everybody wants to go after personal loans, unsecured debt loans, etc. Is it something, but in bad times this can backfire, which we have seen in the previous years, last few decades. So what is your approach when it comes to personal loans? Will it be to own your exclusive client base, or will you be open to others as well?
No, so I think lots of questions within one question. So one is, I think when you look at relative rates of growth in unsecured loans, you should look at the starting point. Right? Because 4 or 5 years back, the size of the total outstanding by the banking system was relatively modest. So therefore, that is one, the base was low. Second is, what has happened in particular in the last 2-3 years in terms of digital sourcing, digital identification, digital risk assessment, getting all the data about the customer from other banks, etc., that has changed quite a bit. So if you just go by a conventional metrics, then unsecured loans growing at the rates at which they are growing, you can say, oh my god, this is a bubble about to burst or so. But if you then say 5 years back, we were giving unsecured loans, small amounts, but we had zero idea of the person's credit history.
Okay.
Now you have a very good idea through the credit bureaus. You had very little idea about the financial statements of the customer. Now using account aggregator, you can directly fetch from other banks. Similarly, employment verification, identity verification, identity fraud, employment fraud, a lot of things which you can do, which while remaining unsecured, its inherent characteristic has become much better. So that's on the overall, I would say.
Yeah.
But that said, I think every banker should be concerned, because you do know that in unsecured, if the loan goes bad, chances are fairly bright you write off whatever you have given. Coming to a bank like ours, what we are trying to do is that in every segment there is a super safe segment.
Okay.
Right. Just as in the corporate world, there is a super safe segment called AAA borrowers.
Sure.
Right. We also think even in the personal loan segment, there is the top 5 to 10%, which is needlessly paying very high interest rates. Okay. Simply because they are clubbed along with unsecured loans, right? And unsecured loans at an aggregate level have a certain loss rate, so therefore everybody builds that in. But we hope we can identify this super safe segment, and tell them that you come to me, I know you are super safe, and therefore I should price you or give you a loan at that. So I would think if there are responsible borrowers out there, we will have a responsible loan product at responsible lending rates. Okay. I could charge them 2-3% more or 4% more. I could charge them the same rates that other banks charge or other companies charge, 13, 14, 16, 17. We are hoping to identify and cater to the needs of those who shouldn't be paying those rates. That's the original plan. When the product is out, we will find out whether this segment exists or not. My instinct says it does exist.
Yeah.
So, if for example, a senior journalist like you were to come to us, why are you paying these high rates? Simply because you are getting clubbed along with other unsecured borrowers. I should be able to see that you work for a proper organization, that you've achieved much. Even if you were to break out on your own, you'll have some reasons to do it. Even if there is some job redundancy, the experience and the exposure will get you a job very quickly. So that's the proxies. That's our target segment. In most things that we want to do, we want to cater to the top 5 to 10% from a safety, conservatism and sustainability.
You are at the start of a very ambitious growth path now. You are returning to the private banking business. What is the plan in terms of hiring people? Do you have adequate headcount for this expansion now, or are you planning to hire more?
No. So I think wherever we choose to grow, and wherever we think there is a market for us to grow, naturally we will need people. So I am sure for some of your viewers, they visit our LinkedIn posts about we are just looking for people quite regularly. We want ideally people whose values are aligned to our values.
Is there a rough number you can give how many people you want to hire next 1 year, 2 years?
No, every year we are hiring between 500 to 1,000, but some of that is to replace the people who go.
Yes.
So it's a constant churn out there. I think I'm not the only organization which is trying to find this right balance between having long-standing, committed, disciplined employees who are part of our values, part of our culture, and then you have this lots of new joiners, and that's an industry-wide phenomena right now.
Typically, industry has seen attrition higher the lower to mid-level. What is your experience in India?
We've also had attrition issues. I think in certain parts of the industry, retail banking, SME, places like that, even technology, I would say, I think the attrition is becoming a management challenge.
Yeah.
For us, it's not as pronounced as what we hear about and is disclosed by some of our local peers.
Yeah.
But yes, all of us would like it to be much lower.
All right. So one question about the industry, Mr. Dave. You know, when you started and now, 20 years ago and now, the industry has changed rapidly. You have several different types of banks. Even PSU banks now wants to grow big. You know, people never, foreign banks never used to consider the PSU banks as a competition till a few years ago. But probably SBI, PNB, and HDFC in private sector is gaining size. So how tough is competition for you in India?
No, see, India is a very competitive banking market, and I don't think any international bank would have ever not considered a top quality name like State Bank of India or HDFC Bank as not competition. They've always been very, very good.
Yeah.
We cater to different segments, and therefore the number of places where we were competing might have been less, but wherever we have seen them, you know, they gave us a tough time.
Yeah.
So that's there.
Yeah.
I think every organization, every bank in the context of a banking industry, I think will need to know where is it that they add the most value,
Right.
to which customer segment, through what products. And this is not just an academic or a, you know, like a management consulting discussion. This determines actually your longevity, your sustainability. So, for example, if somebody comes to me and says there is an excellent project, a very good project,
Yeah.
but you give me a 25-year loan, right? Question is, am I going to do a better job there, or somebody else with a much deeper and a larger balance sheet, right? Whose business is that? On the other hand, there is a customer who has significant expansion plans internationally, wants to open accounts in 10 different countries. Natural HSBC customer, right? I mean, there is nobody more global than us.
Yeah.
Not just in India, but, you know, increasingly that's why we're calling, you know, ourselves India's global bank.
Yes.
So it will, if we get the customer, or similarly, if you have, you know, a middle class person whose daughter or son plans to study abroad, I naturally should bank that person, because when the daughter wants to the point I made about
Yeah.
KYC portability and credit card portability, if I don't take that person, then I'm denying myself good business, and I'm denying that customer an easier journey. So
Got it.
I think right now there are small finance banks, there are payment banks, there are NBFCs, there are housing finance companies, there are PSU banks, private banks, international banks. I think as long as all of us are clear-headed about which customers we can do justice to, because India is an aspirational country now. Every Indian wants to have a better life than they had previously or the earlier generations had. HSBC, for us, I can say that we want to be a banker to every aspirational Indian, whether it be an individual, a family, a small business, medium-sized business, or a large company. And similarly, HSBC wants to be the banker to almost every global company that wants to come. I think we've said it publicly, 45% of global companies that have a business in India bank with us.
Oh, interesting.
Yeah, so on the other hand, that's 45% of global companies coming to India bank with us, and 45% of unicorns we bank. So you can see these are very different ends of the spectrum.
45% of the unicorns in India.
Yeah.
Oh, okay.
We are possibly the only bank which has a dedicated lending fund for startups. It's not small, it's $250 million.
Oh,
right.
okay.
And they again need FDI advice and FEMA advice. So it comes to, do I have the right customer selection?
Yeah.
If I have the right customer selection, I think the market exists.
How many customers you have in startup vertical, approximately?
I'm going to say more than
250 million
1,000.
is quite big.
Yeah, I'm going to say more than 1,000.
Wow.
Yeah. No, I was just completing that point,
Yeah.
that the beauty of India is that even a niche market is a very large market, right? You say, I'll only serve millionaires. So suddenly you find there are 1 million millionaires, right?
Yeah.
So that's a large market. You say, okay, I'll only serve billionaires. You find the billionaire population from 2015 to now has expanded so much. If you say, I'll only serve C-suite is somebody who earns, let's say, 10 lakh rupees a month or 15 lakh rupees a month. That population 5 years back was next to nothing. Today it's a same thing. If you say, I only will bank people who want to open subsidiaries outside India.
Right.
You know, that the niche market in India is the size of a country's market in many advanced economies.
Got it.
And that's the beauty of India.
My last question is this: you have been riding this growth wave in India for the last 2 decades, and you have an ambitious roadmap ahead. Where do you want to take the India contribution to your overall revenue taking? Do you have any figure?
I think before I come to the figure, I would say, not just me, right?
Yeah.
If any of us are not bullish about India, our own prospects, the prospects of our kids, then I think let's get our head examined. Okay, if you can't get bullish now about India, it will be very difficult for you to ever get bullish about anything. Okay. That part aside, we have typically been a top 3, top 4, top 5 contributor at the group profit before tax level. Ours is a very substantial group. I think, for example, our balance sheet now is in excess of $3 trillion.
Right.
We talk about a $3 trillion GDP. Yeah, balance sheet is $3 trillion, right? So naturally, in such a large balance sheet, there are huge markets that we have, and with the rates that the US has played out, you can see that our first half numbers were record profits. I think as long as we are within top 5, that's what our ambition is. In some years we might get to top 3 because we have an extraordinary year or somebody has a slightly soft year. But given how large the group is, I think consistently to be in top 5, occasionally to be in top 3 is our ambition.
Well, that brings us to the end of a very interesting and informative conversation. Thank you for your time, Mr. Dave. Thank you so much. We will get back to you with another interesting guest in the show. Thank you so much.